Namaste, everyone. Welcome to another episode of the Bharatvaarta podcast. The National Statistical Office has put out the GDP data for April to June yesterday, and the numbers did not look good. There's been a contraction of 23.9% quarter on quarter, and this has been a hot button issue that has been discussed since the time it was out yesterday. To discuss this, I have two very erudite gentlemen on the podcast with me today. So we have Sri Thiruvadanthai, who is Managing Director at the Levy Forecasting Center. Sri has a diverse background in banking, technology, psychology, and economics. He's also appeared on our podcast earlier discussing COVID with Balaji Srinivasan. I think that was back in April. Welcome to the podcast, sir. Good to have you on again.
Thank you. Good to be back again.
We have Karan, Bhasin, who is a researcher, and he has interests in macroeconomics, Indian economy, institutional economics, and political economy. You've seen him earlier on our recent Independence Day podcast, and he was super optimistic about India's prospects for the future. We're going to put that to the test today. So welcome, Karan. Thanks so much for joining.
It's a pleasure being back.
Okay. So I guess to begin things, let's start with a very basic question on how you view these numbers. Maybe we can start with you, sir, and then we can move on to Karan.
Right. So, a lot of confusion comes from how the numbers are reported, right? So in India, there are several issues here. One is in India, usually the numbers are not seasonally adjusted, right? So that means you can't really compare the quarter over quarter, typically. Right. Usually in India, the numbers are reported for the quarter and the year-over-year growth rate is generally projected. Okay. And this is actually true for many other places too as well. In Europe, the numbers are seasonally adjusted, but they report the quarter-over-quarter change. Okay. US is actually an exception in this case. In US, what they do is the numbers are seasonally adjusted, but they also report the quarter over quarter change. They annualize it, right? It's like if I have a 10% interest over the year, if I earn 10% interest rate over the year, in a quarter I'm earning 2.5%, right? So, but what they are doing is they take the 2.5 and multiply it by 4. I mean, actually, it's not multiplied by 4; it's compounded. So, and it's a geometric formula. So, it becomes 10%. Right, that's what they're doing. Okay, so when people are reporting the US numbers, which came like 32 or 33 point something, 31 point something down in the second quarter, and they're comparing the Indian number, they are not apples to apples comparison. The only way you can compare it is to compare the US number year over year to the Indian number year over year, and India is much worse. Okay, I think the best way to look at it is the Indian number to look at it is, look, if 100 was the baseline before COVID, we are 25% below the baseline. And compare the US is about 9.5%, 10% below that baseline in the second quarter. So we are 2.5 times worse in terms of how much the drop from the baseline was.
Right.
Okay. That's one way to look at it. That's broadly it. I think these people are getting tripped over quarter, annualizing, not understanding geometric formula. You can't take 25% decline and multiply by 4. That would be 100%. Right? I mean, 100% decline. And even if you were to have the same rate of decline every quarter, you would still not get to 100% because it's a geometric arithmetic formula. So all of these things are getting tripped over. The bottom line is, horrendous decline. It is one of the worst in the world. The only other country that comes close among the major economies is Mexico. So it's a very bad decline. But this was to be expected given the shutdown. Our lockdown has been one of the most stringent, draconian lockdowns. So this is to be expected. I mean, whether the number should have been 21 or 26, we can debate about that. And I don't think this kind of precision at this point in time is worthwhile. Like for instance, the numbers came in worse than what the expectations were. Consensus economists' expectation was like 22 or something, and this came at 23.9. I think given the problems in data collection and all the issues that are there at this point in time, it's just not worth breaking our heads over these small differences. The fact is, it was a big decline, and to be expected given the kind of lockdown we have.
Right. So, Karan, what do these numbers translate to for the layperson? I mean, in terms of jobs and investment or spending or whatever else, if you could help us relate to these numbers.
No, so I'll take on from where Srini sir left in terms of that he mentioned that these numbers were to be expected, and let me probably explain the process of GDP computation, etc. It so happens that what we essentially measure when we talk about gross domestic product is the value of goods and services that are being produced in an economy. So that is basically what we are trying to estimate. Now, this period for which we have the GDP number, which is the first quarter of the financial year or the second calendar year quarter, which is April to June, we had a lockdown which was there till pretty much mid of June. And by share of sectors, probably 65 to 66% of our economy was shut. And the rest of the economy was operating, essential services such as medical services, public administration, etc. Those were the services that were continuing, and obviously some IT services which could be done from home, from remote locations were being done. Now, when you have 60 to 65% of your economy shut, where there's no production happening, no value addition happening, you would expect that there would be a contraction, and that the contraction would be pretty sharp. So the way to interpret this is basically precisely this: that we had a lockdown, which meant that the economy was not functioning, and because the economy wasn't functioning, there was no value added services or no production activity that was taking place in the economy. And because there was no production happening, you are below the baseline, which is compared to the previous year, the same quarter the previous year. And what it really translates to is that lockdown had a pretty steep cost, and this is something that has been discussed several times since then, that we had the most stringent lockdown, and that what it meant is that we are looking at a pretty severe contraction. In fact, in earlier work that we did, we recognized that probably we couldn't have growth, which meant that positive economic growth over the financial year, if the lockdown went beyond 5 weeks, which was one of the estimates that we got, and it looks pretty much that we are going to end up with a sort of contraction over the complete fiscal year. What this means for the immediate term is that the baseline or the economic level at which the economy will operate will now be slightly lower than what it was in the previous year, and we have a lot of catching up to do. We have to catch up for the economic activity or the level of economic activity that we have foregone in this particular financial year. And then obviously we want to grow at a faster pace, which is say 7.5%. And mind you, this sort of COVID pandemic happened after one of the most sharpest growth slowdowns that we have seen in recent memory, which meant that both the private sector and the government sector face constraints in terms of their ability to sort of invest in the economy. Luckily, the government obviously can borrow or rather get the RBI to monetize some of its deficit to continue with its commitment towards expenditure, etc. And I think broadly what it really means is that we are going to look at a pretty different macroeconomic understanding going forward from the Indian policy establishment, which has been too conservative over the last couple of years. And I think Srini sir is probably would like to add to this, because he has been constantly saying that our fiscal policy has been too tight over the last couple of years. And broadly, I do agree with that assessment.
Right. So I'd love to ask you that question, which Karan hinted on, which is that is it time for the government to sort of loosen up, spend more, and all of those things. But also, I mean, want to come back to something you mentioned in your initial comments, sir, which is that the contraction relative to other countries, let's say the G7 countries itself, has been sharper. Is this because of a stringent lockdown, or is it because the economy is dependent on certain key sectors which are different to those countries? How does someone read this in comparison?
Right. So partly because the lockdown is stringent, but partly also because we have a lot of human-facing services, right? Compared with, let's say, in the US. US also has a lot of restaurants, all those kinds of things. But US also has a lot of services that can be done work from home. Relatively speaking, there is a much more wired and connected economy, right? Which is not the case in India. And in India, those places which are wired and connected, people are working from home. They were able to make the seamless transition. So the problem really is in so many. And we are a service-oriented economy, India, compared with other emerging economies. Manufacturing is a small part. You can run factories because there's not that much human contact in factories, but it's very hard to run restaurants and things like that. And obviously, we are not. And so that's one of the main reasons why the lockdown, the effect has been stringent. But as Karan pointed out, even before coming into the thing, the Indian economy was doing poor. It was vulnerable. And part of the reason is because of the conservative policies that the government has generally followed on the macroeconomic front, both fiscal but even monetary policy. The RBI was way too tight, in my opinion. So both these combined together, the economy was vulnerable, and COVID was a really bad body blow in that context.
Right. So things basically compounded, I would say.
Yes.
So
yes. The economy was not robust. No.
Right. So, Karan, an estimated 11 lakh crores was shaved off from the GDP. One way of looking at this is a trade-off in terms of the lives saved and the healthcare outcomes, that we've achieved, right? So how do you view that trade-off in that sense?
Look, I'll be very honest. I think the first lockdown probably made sense, which was a 3-week lockdown. And the reason I say that it made sense was because we knew too little at that point in time. And obviously, we wanted to get as much information as possible, prepare our physical infrastructure, healthcare infrastructure, etc. But the question is that what we really need to ask is that was any of the lockdowns posed that, what benefits did it yield? And it's very difficult to quantify or really have a precise answer to that question. What we do know is that, across the world at that point in time, lockdowns were being implemented. The difference is that I think we continued with the lockdown for a bit longer than what we should. And I think it's also a part of the political process in India where, now, even though central government has recognized that probably lockdowns are not going to be of much use, but state governments continue with their lockdowns. And I think the same is also playing out in the US where, states are a bit more reluctant to open up the economic activity compared to the federal government there. But to be very honest, more and more research is coming out and telling us that lockdowns have not had the desired effect in terms of reducing the spread of the virus. What they have done is they've given countries time to prepare their healthcare infrastructure. And if that's the purpose with which we, view the lockdown, then probably, after the first 3 weeks, we should have probably started unlocking.
Yeah, initially, I guess, it was preemption, but right now, it's becoming an abdication of responsibility in some sense, I would say, right?
Yeah.
So, for the government itself.
Yeah, and there's a moral hazard problem that has come into force as well. You see, state governments generally get their revenue from indirect taxes, primarily from GST. And what we see playing out right now is typical Indian politics at its worst, because states want the center to compensate them for the GST, which again is one of the compromises made by the government when it wanted GST to come into sort of effect. For those who are not aware, when GST came into effect, states were concerned about their revenue position. So center said that we will compensate you for any revenue shortfall and give you a 14% annual growth in your revenues, tax revenues. And that's the GST compensation issue. Now, when there's a lockdown and when there's no economic activity happening in a state, obviously there's no GST coming in. So center has to obviously pay the compensation. In the case of state lockdowns, center still has to pay the compensation. So states do not really lose much, even if they were to implement localized lockdowns. That's one part of the problem. And I think that is, a big concern going forward, because we have had West Bengal and Maharashtra force another lockdown for the entire month of September. Life cannot perpetually go on like this till the time we find a vaccine. We really do need to get back to work.
So do you see any kind of an intervention on that? Just a quick point on that.
I do think that, at some point, the solution to this has to be a political one and not a legal one. we cannot let this become a legal battle and let this go to the constitutional bench of the Supreme Court. And the reason is that, of course, when the states entered into an agreement with the center, it was very explicitly stated that they will compensate.
Right.
But nobody saw COVID coming in at that point in time. Again, this is something that this is a black swan event. So
Right.
what will happen as a process of that legal issue, nobody knows, which is precisely why I think a political solution is needed to this problem.
Right. So, sir, is the worst behind us in some sense? I mean, so you've seen that in August, the auto sales have been good, right? Barring a few small players, all the big guys like Maruti, Tata, so on the agri side, see, their sales seems to have picked up. The purchasing managers index came in at 52 compared to 46 in the previous month of July. So, can we say the worst is over?
Yeah, I mean, I think the worst is over. The real question is how robust is the recovery and how much permanent damage that we have done, whether it's small businesses and things like that, right? And, we can't perpetuate, as Karan said, we can't perpetuate these lockdowns. I've been saying this right from the beginning. We cannot adopt the same policies that the developed world does. Look, it sounds harsh and it sounds incredibly cruel. The value of life, there is a value of life. It is not infinite. It is not priceless. There is a value to life. Okay, the value to life is what you can afford ultimately to pay for the hospital, or somebody is dying, and if you can't afford, somebody has got a critical illness. If you can't afford the hospital, the person is probably going to die. I mean, that's a real fact of life. There is actually a call, but that sounds incredibly harsh. And I remember when I tweeted about this a long while back. And people were piling on me saying, oh, no, even if one life saved is worth it. I mean, that's not true. One life saved is not worth it, because there are so many lives that are going to be lost at a silent killer, which is poverty. When people don't have jobs, people don't have any future prospects to look to. There is a silent killer called poverty, which we do not measure properly, right? And so, we've come to the point where if we keep doing lockdown, we'll do permanent damage to businesses. Think about restaurants that will never open up. Think about malls that will never open up. Then you'll have tons of small businesses, manufacturing, non-manufacturing, small businesses that will never open up because they just can't tide over that long a period of time, right? They just go back to wherever they were, from villages or wherever it is, and pick up their lives there, and they are not going to come back immediately or for many years. So that's the permanent damage to the productive capacity and the growth potential of the economy. So maybe we'll settle down to 5%. So we can't afford to do that. See, right now, let's step back. There are three different aspects that COVID lockdown does, right? One is a stop-start effect. So you shut down activity, okay? Now assume that COVID goes away and we go back to life as usual. We come back to the original trend, right? That is a normal, reverting back to the mean. It may take 3 quarters, it may take 4 quarters, whatever, but it's a matter of coming back to it. That would be no problem at all. However, there is another impact. The second impact is the permanent damage it does to some businesses, which are not, the longer you stay away, because of financial costs, you do permanent damage to them and they don't come back, right? That's the second problem. The third problem is the permanent damage you do to the financial sector, with the banks and other financial institutions with the loan losses and everything, NPLs. If you do enough damage to the capital, they won't lend when things start to recover. So then the normal lending activity without credit availability, we won't have the same level of investment and activity to restart growth and come back roll. So I think we can see these auto sales. So this is the kind of thing that you would expect when lockdown is removed. It should come back. The real question is, are we going to do permanent damage? And for that, we really need to restart activity. And I think I understand the policymakers here is a dilemma, right? India doesn't have enough healthcare capacity. So the problem is, if we restart and suddenly the cases surge up, the healthcare capacity can get overwhelmed. In fact, one of my classmates from college recently died in Chennai because they were not able to get him from COVID, because they could not get into a good hospital. So, that problem is there. And so, I understand why they did the lockdown, because they didn't want the whole system to be overwhelmed, right? But I think we have to do it now without and see as it goes. If the healthcare system is getting overwhelmed, we may have to reinforce it. But I think that's the way I would think about it. Maybe put emergency facilities, like we do during cyclones and things like that for healthcare, primary healthcare facility, emergency healthcare facilities. And I think we have to find some more innovative solution instead of lockdown, which seems to be just a copying out at this point.
Right. So Karan, on that same note, how do we ensure we bounce back from this and not let it get much worse?
No, so, I think Srinivas summed it up pretty nicely when he said that there are three ways to look at the problem. As I said, financial sector was already, in a mess before COVID, which means that this will obviously have a greater impact and that will spill over to the real economy. So the question that we have is that what are we going to do about the stress that is already there, and how do we ensure that the financial sector stress gets resolved quickly? Before I come to the policy stuff, the way I look at this particular process is that in lockdown there's no level of no level of economic activity. Then comes the process of normalization of economic activity, where we tend to revert back to what was the economic level in the pre-COVID situation. That seems to be happening in certain sectors, but again, that's a process that will continue, according to me, till about another month or so. And after that, we probably will get a better sense of whether we will be reverting back to the potential growth rate which pre-existed or rather predated, which will help us understand what is the extent of permanent damage that we would be doing, or rather what will be the permanent damage of the pandemic. Now the question is that even though Maruti sales have gone up and other automakers have registered a pretty decent number of automobile sales, etc., we need to be careful the way we interpret it, because a lot of it is also pent up demand. People could not buy these cars, etc., till the time the lockdown was lifted, and now that it's gradually being lifted, a lot of pent up demand is being generated, which we are seeing, whether in terms of tractor sales, etc. The real question is that whether this will be sustained or not, and I think probably it wouldn't be sustained. There will be some tapering off that we'll see of this over the next couple of months, and we should be mentally prepared for it. As far as recovery is concerned, of course, there's a lot more that needs to be done on the policy front, because getting a financial sector in place will be absolutely critical if we want to go back to growing at 7.5%. As Srinivas rightly said, we can't have banks who are not willing to lend, and the pandemic will see a rise in NPAs, etc. So the way to address those are macroprudential regulations, allowing banks to not recognize them for some time, or restructure them as much as possible. Probably even doing a bad bank like exercise, because we've I think a lot of the times what we really do is we try to view these problems from a moral perspective rather than a rational perspective. I see no reason why probably an idea like bad bank, where we take all these bad assets out of the banking system, I think it's a no-brainer, and critics are going to talk about moral hazard and those problems. But right now, what is essential is to get growth back on track, because Srinivas rightly said that there is a trade-off. It is a definite trade-off in front of us at the moment, whether to save lives or whether to save livelihoods, and it's like a trade-off between preventing lives lost to COVID and lives lost to poverty and hunger. And I think that trade-off was, miscalculated or misunderstood at the time of imposition of the lockdown. Now that we have a better sense of this trade-off, probably we need to act swiftly and boldly to ensure that we can manage both simultaneously.
Right. So I want to come to you on the interest rates, sir. I mean, so what is your opinion of that? I mean, because as Karan mentioned, one of the things will be, businesses getting money to fund their growth and so on, right? So, what is your opinion on the prevailing interest rates, and what can we do about them?
Yeah, I mean, I'm not such. I mean, I think at that before COVID, I did say the RBI was tight for the last 2-3 years, but right now I don't care. I'm not so worried about the interest rate per se. Businesses are not going to invest right now because they have so much spare capacity, right? Who's going to invest right now? You're running at 60-70% of capacity. So there's no real need to invest. Then there is also the financial burden that they already have with their debt having gone up. They've lost cash flow, those who managed to survive, that they're going to be trying to repair their balance sheets. So it is not the interest rate that is going to hold them back. So the real problem is to get demand back where they now feel confident that they have the cash flow and the revenues, that they feel confident about the future that they're going to invest. So I think the main thing that impels businesses to invest is not so much interest rates, but the future, the prospects for the future, confidence about the future, expectations of the future, right? Think about it like from any businessman's perspective. I mean, look, it is not that interest rates are irrelevant. They are relevant, but they are not the dominant factor. The dominant factor is that there has to be a customer. At the end of the day, you have to be able to sell whatever you are making, right? And the prospects of the future of growth, that's what impels businesses to invest. Right now, that's not there. So business investment, I think, is going to remain weak. So we can't expect that to come back. That's why interest rate policy, the main channel through which it will work is through maybe real estate, that is housing, and maybe consumer durable goods, right? Financing of that. But
Right.
the key here is we need fiscal policy to support growth, support demand until such time that things look good enough for businesses to pick up, which will take at least 3 to 4 quarters. I mean, we shouldn't be expecting any miraculous recovery in business investment here. I think there'll be a rebound simply because things have stopped and things will pick up. But beyond that, it will be very flat.
Okay, so if I understood that correctly, what you're saying is lower the interest rates, maybe to spur consumer demand in real estate or other sectors.
Right.
But for businesses as such, I mean, for availability of loans and stuff, what is your solution to that? Because I mean, we recently read about the case of this. I think it was Canray Technologies, which had a contract from the government or someone to build ventilators. They even gave away their IP, I think, free to one of the PSUs. And the guy was not able to finance that demand, right? So in these cases, where do these small businesses, which need cash, how do we save them?
Right, that's a very good question. That's a different question from the interest rate. It is not it is the availability of credit itself.
Yeah,
right.
Liquidity, basically. Yeah.
Right. I mean, I think that's what we need to focus on is the credit constraints that are there, whether it's banks pulling back, we are not lending because our capital is threatened. Okay. And I think that's where we can do few things. One, either the government directly does, like in the US, the Federal Reserve has instituted a program called Main Street Lending Program. So what the Fed does is the banks make the loans, but the Fed buys those loans. So the banks don't have to take the risk, right? Or funds those loans indirectly or directly, right? So we can do such a thing we already have mudra, so we can expand mudra in some way. Okay, so we can do that. That way, you're getting these small businesses who the bank trying to force the banks to lend in this environment is not a great idea. Okay, you can make it easier for them to lend. Ultimately, the government has to take a lot of the load here. There is really no other solution for it. Whether through mudra or indirectly asking the banks to lend, but taking on the risk, the government taking on the risk, whether through RBI or the government's own balance sheet. I think that is critical, but that's not so much an interest rate phenomenon, but availability of credit phenomenon, right? Even top interest rates, but people are not willing to lend, they won't lend. You can't force them, and that's happening even in the US for that matter. Interest rates have fallen so much. Banks are actually tightening on their lending standards. In fact, Capital One recently came out, they're actually cutting down the credit lines on credit cards. So they're lowering the credit lines. So suppose you had a $30,000 credit line on your credit card max, and they're cutting it down to 20 or something like that, or 10,000 to 5, So people are tightening despite incredibly easy policy in the US, much more aggressive than in India. So that's a natural reaction of the private sector that is trying to strengthen its balance sheet in the face of catastrophe.
Right.
That's why the answer has to come. We have mudra, we can expand mudra. There could be other ways to do it. That's the way I would think about doing this.
Right. So Karan, in light of, go ahead, please.
Yeah. I just wanted to add to that, that the problem of risk aversion is there across the world. And of course, government needs to step up and address this problem heads on. The fact that we have a public sector bank as the predominant lender can come handy during these times, but there has to be a willingness to take that risk and to have the appetite to guarantee some of the loans and to tell bankers that what, you go give out loans, there will be no prosecution. Should the loan turn bad, we'll take care of it, don't worry, or to guarantee some of this. I think that becomes essential going forward. But more than that, I think what we really need to also discuss is to look at money supply as an instrument which can be absolutely essential going forward. And I say this because there's limited capacity or there's limited savings which are available to finance both the government's deficit, state's deficit, etc. So we obviously have to have the central bank print currency to be able to finance all of it. And while we are doing this, then we really need to look at appropriate, so to say, intervention by the monetary policy whereby it can support fiscal policy going forward. Because ultimately the growth recovery will happen only when there's a proactive fiscal intervention. But for that, you need monetary fiscal coordination to take place. And I think more than interest rates going forward, it is precisely the money supply, M1, M3, these monetary aggregates that are going to play a predominant role in assisting both the government and obviously the private sector through different transmission channels
right.
in ensuring that, the sort of expansion takes place.
Right. So would you say you're happy with the way RBI has, handled the crisis as such? I mean, recently they announced this 1 lakh crore LTRO as well, right? So your opinion?
Well, yeah, I think, okay. You go ahead, sir.
No, RBI has done a good job, in my opinion. In the wake of the crisis, they have done what has needed to be done. I think their interventions have been very solid, and I don't think that. Yeah, I think now the ball is in the government's courts, in Finman's courts.
Right. So it's a political problem.
Yeah.
Right. Right.
No,
yeah,
I absolutely agree. Because the RBI or the MPC RBI, whichever way you want to look at it, the way they were operating pre-COVID and the way they are operating post-COVID or post-pandemic, it's a big difference. From a conservative central banker to see what they have done over the last couple of months, I think it's pretty impressive, and RBI has come around and recognized the extent of the problem that we face. Can it do better? It's again a very subjective question, because we cannot predominantly depend on monetary policy to give us or to assist recovery, especially in a problem like this where, we need fiscal policy to be the dominant policy intervention. So probably RBI has done whatever it could have done. Now what will follow will obviously depend on the extent of political will of the current government to really provide a fiscal stimulus. Luckily, both the chief economic advisor and the principal economic advisor yesterday hinted at the prospects of a demand stimulus. One is hoping that demand stimulus is actually a demand stimulus and not one which is dependent upon banks to lend, because banks are really reluctant to lend. And as you rightly said that, I've been talking to a lot of SMEs, and I can tell you this, even with 200% collateral, banks are not willing to put their capital at risk at the moment.
Wow.
So that's a real problem at the moment.
Right. So, sir, many people are predicting by conservative estimates, according to them, that there'll be a full contraction of 7% for the full financial year. Do you see that happening, and do you see us recover, in terms of GDP growth going forward?
I think it could be worse, but I'm actually not that worried about whether it is 7 or 9. Okay,
Right.
I think it really is what actions do we take that when we come out of it, we are coming out roaring and going to looking at a bright future. I think that's really the key. I think focusing on whether it's going to be 7 or 9, it could be, my own expectation is going to be worse than that. Because we still have a lot of lockdown, so, we are half the year is lost. Think about it this way. When did we start lockdown? March 25th, right? So April, May, June, July, August, 5 months gone, and it's almost going to be September, 6 months. Half the year, half the activity is stopped. That's like 25% effectively of GDP.
Right.
I mean, if you really think about it, right? I'm being partly joking here, but that's the kind of an impact. So it shouldn't be surprising that it's a 10% decline on us. Whether it is 7 or 10, I mean, how does it matter? The real issue is COVID we should get control of COVID. That's number one. Number two, we take aggressive policy. See, here is where a stitch in time, people don't realize this thing. And I've been talking about this for 5 years, even before COVID, that you need to take aggressive action up front so that you don't need to take more action later on and make things worse, right? So, and the US is a very good example in this. The US took really aggressive action on the policy front, on fiscal and monetary policy. Not so good action on the actual COVID healthcare policy front, okay? But look at now, the current GDP in this quarter is going to be, this annualized thing is going to be 25% or something like that, 25%, So they're coming back roaring, right? Because they took aggressive action. But what that aggressive action does is when the economy comes back, you need less fiscal support. When the economy comes back, automatically tax revenues come back. GST, in India's case, GST will
all is rolling basically.
Better, right? Automatically will look better. The fiscal situation will look better. But the more you let things worsen because you are afraid of taking more aggressive fiscal action now, you will have worse fiscal situation 5 years down the line because growth solves a lot of problems. Ultimately, you need growth. Growth will solve all the problems and we need growth.
Right. So what are those fundamental reforms that you expect to see in the next few months?
I've been talking about this reform. A lot of people keep talking about reform from a macro perspective or from, very superficial things like, okay, this license shouldn't be there, this ease of doing business. Most of the problems in India are not from the center's perspective. It used to be 30, 40 years ago, or even 10 years ago, and this government has done a lot to ease business from the central government perspective, right? They make things much, much easier to clear. And which is why the ease of business, doing business has improved, ranking has improved. A lot of the problems are at the local level, at the state level, right? If you want to open a restaurant, if you want to shop, you have to get some 30 permits, 30 clearances, 20 inspectors, all kinds of things are there. We have like so many labor laws at each local level, right? There's just so many inspections that have to be done for labor, for health, for pollution, for environment, so many things that have to be done that it's just incredibly hard to start a business. In fact, recently, Vembu Sridhar, who's, a famous entrepreneur, just posted about one guy's difficulty in starting a small manufacturing unit in Maharashtra, right? He posted it on his blog or on Twitter or something. You should take a look at it. I mean, that it just shows the problem is at a micro level, and we need to be able to solve that micro problem. It's not just at the macro level, at the central government level. How do we make it easy to start a business? I want to start a lathe shop. I want to start a small manufacturing unit. I should be able to start it in 1 month. What are the problems? We need to look at those, and at least the states which want to, now the central can't direct the states, but some states should take the initiative of doing these things. That's the fundamental roadblock for starting the businesses in India. And we get rid of those things, then we can proceed. And that's the kind of reform. If you look at, people talk about corruption and everything. So the issue is not that corruption is great or bad. The issue is in India, a lot of people have the ability to stop things, but nobody has the ability to clear things.
Right.
Nobody has the ability to clear things. Long back when I was working at ICICI, most businesses would have one guy just dedicated to trying and going to government offices to get clearances for things like that. It would take months and months to get these things. And these were for big businesses, not for small people. For big businesses who can afford to hire one person and pay him just for doing this, sitting around some office, just to try and get power permit, no objection permit for converting agricultural land to industrial land. Just so many permits that are needed in India. And I think these things, people will say, hey, the West has it. That's true. West has it. But West has it because they have a much higher level of of GDP, and much higher level of government capacity to enforce these things. These didn't exist in the West 100 years ago when they were at our level of GDP. And this also, there's a lot of misunderstanding about the role of government. In India, people think, oh, the government is too big. Government is actually not too big. If you look at the number of government employees relative to the size of our economy, or it's not big at all. It's actually very small. That doesn't mean we should go ahead and hire more people. That's not the issue. The issue is if you make a lot of laws and a lot of regulations, but you don't have people to enforce and clear it, it only creates backlogs. Perfect example is our courts. What is a backlog in our courts? Most of these are civil litigation, commercial civil litigation, locked up for 20 years, 30 years. So if you have that kind of situation, you're not going to have a functional economy, because then people will seek, they know that there's no judicial remedy, legal remedy that's coming immediately. So they will seek all other kinds of ways, which increases the transaction costs and cost of doing business. And I think unless we address those issues, this is going to be a problem. And my solution to that is, in the immediate term, we should at least clear out a huge amount of these useless laws, rationalize them, bring them down to a small list of laws, and so that you can get and start a business within 1 month. And most of those are local, state level problems. And I think that's where we really need to look at what we can do there.
Right. Yeah. So what you're talking about is a very, very fundamental thing, actually, and it had to happen sometime better now than any other time in history, I would say, right? So, and you've seen states like UP and Gujarat step up and change their labor laws and some things to that effect. So Karan, so Sir spoke about on the laws and what the states can do, but there's also the case of many people whose livelihoods have been affected and so on, right? So what are those reforms that the government can do, both the state and center, to kind of help these people tide over this period?
I'm a big fan of reforms in the sense that they do have an impact, but those impacts are more in the medium to long run. So it means that any reform that we may have right now may not have the desired impact immediately. Of course, land and labor reforms are an exception, because land does unlocks a lot of agricultural assets which can then be immediately put to use in other productive areas of the economy. But the immediate solution that we may have will come in the form of direct fiscal action. And there are no two ways about it. Of course, we want to attract these global value chains, so we need to provide them land, relax labor laws, etc. But even those supply chain shifts will not really manifest within the next month or two. Those also are more like a 6 months or maybe 3-4 quarter a long process. So for those that have lost their jobs, for those who have seen wage cuts, etc., the immediate sort of relief will come in only once the economy starts to recover, when the labor market becomes slightly more tighter, in the sense that there are more jobs that are available. What I'm really worried about, even though I'm very optimistic about the medium term, I'm very worried about the immediate 6 months, for the reason that I see a lot of companies which haven't yet adjusted their workforce, their number of people that they've employed. I think they have adjusted the working hours, they've adjusted the wages, but we haven't seen the extent of wage cuts that probably, I would ordinarily assume would have happened. My fear is that if we do not really act right now, we may see some of it happening in the next 3 to 6 months. And that would be catastrophic, because every job lost and every firm shut represents, a permanent loss of job, a permanent rundown on the capital stock. So Rahul Bajoria has been writing about this for quite some time, that when you have a rundown of capital stock, when you look at growth, it depends on factors of production and on productivity. So if you have less capital employed in an economy, obviously you'll grow at a lower pace. So we've circled back to the original problem of, what will be the permanent damage that this will do. And I think more than reforms, probably an adequate fiscal package, whether in the form of more government capex on some of the infrastructure projects is concerned. They have a 100 lakh crore national infrastructure pipeline. They could probably front load some of it, finish some of the existing projects that are going, and clear past dues, etc. I think those measures, probably to some extent also cash transfers, need to be. So we have to be very innovative in the way we sort of go forward and provide relief, and try to sort of stimulate demand. But
Right.
in my mind, I think I'm very clear that it has to be a classic Keynesian stimulus and not a macroprudential stimulus going forward.
Right. So
100% agree with that.
sorry, go ahead, please.
No, I 100% agree with that. The reforms will be a longer term. The results will show over the longer term. In the short term, we do need this stimulus. And absolutely, that is what is critically required in to ensure that the patient is stable.
Right. So what is your opinion on the, some of the stimulus packages that were announced in May by the Prime Minister, and, any other, anything else that you would hope for on that front?
No, it is inadequate. I think we need to do much more. We need to do much more. And if you're worried about what it does to the long-term interest rates and things like that, we have to monetize it, which is what the RBI should be doing. Is to monetize the deficit. And I don't think we have to worry about it. People are worried about inflation. In the short term, you will have inflation because you don't have production. You have all kinds of supply constraints, right? And so you're seeing inflation. This is a temporary inflationary phenomenon. It's not a permanent inflation. And you're going to see this because it's so much harder to get the stuff to the end market, right? I mean, even if you're producing vegetables or something like that, getting into the city, there are so many restrictions. It increases costs, and obviously you're seeing a short-term phenomenon. There's no loss of production in agriculture. There's no loss of food production. It's actually this year is going to be very good. So I don't think there is any real fear of sustained inflation. So we should just monetize the deficit and not worry about it, and do a go big or go home, as they say in the US. Big or go home.
Right. Yeah, so that's a fantastic note to. Sorry, you had some comments, Karan?
Yeah, no, absolutely agree. In fact, when there have been nominal wage cuts, to even think of inflationary pressures becoming permanent, I don't think that has ever happened in the history, or in at least modern history, where we have experienced inflation. Nominal wage cuts usually are a sign that probably we should be more concerned about prices falling rather than increasing. So there are no demand push or wage push pressures on inflation. So I think probably inflationary risks are pretty low. We don't have any risk on the external front either. But I do sort of partly disagree. The stimulus that was announced was not a stimulus. That, to my mind, was only a relief, or rather a sort of rescue package to prevent the sort of slide to become huge, or to prevent massive bankruptcies. I think it does very little to revive growth. So to call it a stimulus package would probably not be correct. It was just a COVID relief and rescue package, which did to some extent its job. We haven't seen the kind of massive bankruptcies that would have happened in their absence. But I think it's important to recognize that that will be grossly inadequate, and we cannot risk having a lopsided recovery, because economic activity may normalize and it may grow for a quarter or two, and then we will slide into a major crisis, and at that point it would be too late to have a sort of adequate fiscal response, which is why it's important to front load, and as Srinivas said, go big or go home. So whatever you want to do, just do it right now, rather than waiting for picture to become more clear over a couple of months.
Right. So quick question on that. Do you expect like more DBT type, scheme to be announced on that front? Like, just give them money to tide things over, maybe especially the people that you think may, be under a job loss in the coming months?
I don't know. I think the government is really, fascinated with the DBT mechanism. I don't know whether they will go for that, because obviously, we have a lot of companies, we have a lot of people. So DBT has those inclusion exclusion problems, and the amount may also not be substantial to stimulate demand. I think it's more probably, I think it makes more sense for the government to really focus on heavy capex, because that may probably kickstart the cycle, and I think government may resort to just that. But I think whatever will be the fiscal intervention, a lot of it has to be front loaded for sure. But we need a 2 to 3 year, sort of heavy stimulus, fiscal sort of, intervention. So suspending the FRBM for a couple of years, not really worrying about the public debt to GDP figures, ensuring that the recovery is full rather than pulling back policy support. The way we pull back our policy support will actually determine a lot of where our potential growth rate would eventually settle in by the end of this sort of 2-3 year cycle. And I think to think of it as probably just a 1 year impact is probably being too optimistic. Whatever intervention we may have, even on the policy front, will have an impact going forward. So we really need to have a more comprehensive view of the situation, and we need to really relax and be a little more aggressive and bold on the fiscal front, and not just for this year. For it, in fact, Srinivas mentioned that we have been too conservative over the last 5 years. I would argue for the remainder tenure of this government, they should definitely not be conservative. With sort of permanent slackness in the economy, there is no demand push inflation. The labor market is definitely not, I mean, wages haven't really increased to the extent that would put inflationary impulses. Our external front is also looking good. We are planning to get a lot of supply chains to India, which means that we need to work on getting our logistics in place. So I really think that there's a lesson to be learned here from the mistakes that we have made in the past, and the sooner we learn, the better.
Right. One final question to you, sir. Actually, so we've talked in previous episodes about opportunities going forward. How the whole geopolitical thing is playing out in such a way that maybe India will see some opportunities come its way. How do you see us taking advantage of all of those things? Aside from some of the stuff that Karan mentioned and you've mentioned earlier as well, in terms of what the government can do. So your final comments on that.
Yeah, as I said about the laws, local laws that make manufacturing, setting up any business hard, especially manufacturing. But again, land is also a major factor, right? Acquisition of land has to be made cheaper and made easier. The government has to find some innovative ways. Maybe there is so much land that government itself owns that it can release easily, do it in some way, some innovative way.
Right.
And so if we do that, and we create an overall ecosystem, people think, that there are two things you have to remember when you're trying to create a manufacturing ecosystem. It's not just about getting the foreign multinational to come and put up a factory. They need around them an entire, sorry, I apologize.
No problem.
They need around them an ecosystem consisting of many small manufacturers and smaller suppliers. So you need to be able to make it easy for a lot of small manufacturing units to be set up, which will be locally owned, local businesses, So that ecosystem, creating the ecosystem is the challenge. And that's where large businesses can always get the clearances in one form or the other, although that's also not clear in India's case. We look at POSCO, look at Sterlite, I just think we need to be able to cut through this in an aggressive way in some form or the other.
Right.
And that's where we can, the loha garam hai, hathoda marna hai yahan. But loha is garam. Right now, it cannot be, people want to move their supply chains and we have to take advantage. The opportunity cannot be lost.
Right. Yeah. So it's a fantastic note to end the podcast on. Thank you so much for your time. And maybe, when we discuss this 4 or 5 months from now, hopefully we have better things to, say, and let's hope that it works out. Yeah. Thank you so much, sir. Thank you, Karan, for joining us.
Thanks.
Thank you.
Thank you.
Thank you for tuning in. This podcast was brought to you by the team at Bharatvaarta. If you liked this podcast, then don't forget to share, subscribe, and rate us on your favorite platforms. We're available on Anchor, Apple, Google, Spotify, Stitcher, Breaker, YouTube, and a host of other platforms. We started Bharatvaarta to facilitate long-form discussions on politics, policy, and culture. We don't necessarily endorse anything that was said in this episode. If you do wish to offer us any feedback on the content or anything else, do reach out to us on social media or get in touch with us on our website, www.bharatvaarta.in. The links are in the description below. Thanks again for tuning in. Until next time, stay safe, take care, and Jai Hind.